You're listening to Life with DJ Sessions right here on WCSUFM.org.
All right, welcome back to Life with DJ Sessions. My NMLS number is 271823. Today we're going to kind of discuss a little bit about, I know the last episode we talked about the entry level into home ownership as it relates to down payment assistance or even just getting in as a down payment. I saw a post the other day, the guy was talking about credit scores, and he said, you know, it's not necessarily your score, it's the profile, and there was some truth to that. But let's not make any mistake. I mean, you still have to have a good credit score to kind of entry level. So I kind of just want to go through today to talk a little bit about, I call it lanes, right? And so when we talk about lanes, I mean like the fast lane. So what qualifies as fast lane? Well, that's someone who, say, credit score is over 740. They've got a down payment of maybe 20%, or even maybe the 5%, 3%. They've got that money. Their employment is W-2, so maybe they work for an employer where it's easy verified. They've been there over 2 years. The income is consistent, debt ratios. They're able to negotiate not only a super close, maybe 10 days, 15 days, but they're also typically able to also win in offers, right? And so because of the inventory issue, just being in the fast lane is going to help you win on offers, especially if there's a certain neighborhood you're looking to get into, certain school district. So that's kind of the fast lane. You know, the middle lane, where I say that's kind of where you're looking at maybe 660, 640, 680 credit score, maybe a little under 700, maybe your employment, maybe you have verified income, but it's not as, maybe you're self-employed, maybe the employer just isn't the one that we can just do electronic verification of, but you're in the middle lane. There could be a circumstance where you are also trying to maybe get down payment assistance, or maybe you need to get a gift. You're still in the middle lane. You're still able to move relatively fast, but not as fast as the fast lane, right? On the fast lane, you can put 20% down and maybe not even need an appraisal, right? Whereas if you're not putting at least 20%, then you're going to need some sort of additional verifications. And then we're going to talk the slow lane, right? Slow lane is when your credit score is below 620, right? Maybe you need down payment assistance. Maybe, maybe you've had 2 jobs in the last year. And so when I talk about these different lanes, what that really means is that is the lane in which, your path to purchasing that real estate, and that path in which you go down, and what that experience is like. So my job, originator's job, is really to try to find that right path, and then help you along those paths. But the purpose of the lesson here is for you to kind of understand what path you're on, and then maybe you want to get to the fast lane. Okay. This again has been another episode of Lessons in Financial Empowerment. Thank you.
You're listening to Life with DJ Sessions. Special thanks goes to Wade Oberlin of OnOurOwnRadio.com, Charles Fox, K-Divas Music Media, and the BDG Network. For more lessons in financial empowerment, stay tuned right here on WCSUFM.org for more Life with DJ Sessions.